Hey guys, this is Adam from Dodjit.com and this is your video briefing for the 5th of October 2009. Alright, things don't look too good at the moment and we've received this massive correction. It started on Thursday after the ADP result. Job losses weren't that good, the numbers weren't that good, and the markets basically just crashed lower. We also received some mixed signals from the housing market. So things are looking like they're starting to correct, or they have already started to correct. We can see here a massive drop on Thursday and further continuation on Friday. Friday, surprisingly, wasn't that bad of a day compared to the results that we received from the NFP. And I was expecting that something a little bit more of a type of sell-off, and I was expecting that we were going to break the 50 moving average, and this is an important average. We're going to talk about this average quite a lot in this session. Basically what happened is the markets came down, they gapped down at the start of the session and then retraced higher. Now they found support on the 50-day moving average. Now we're going to just basically jump into the charts and show you what we're looking at. First of all, we have broken our major trend line going lower. Is this a bad thing? Well, it is a bad thing if you're analyzing the charts via trend lines. If you take into consideration price pattern and upcoming support levels, might not be so bad because we've got a lot of conjunction around this area. Just look at this area around here, and we are now on the 50-day moving average. So basically what I'm looking at is something that could occur that's similar to the crude oil chart. We've got a lot of volume around here, but look, if we just flip over to a crude oil chart, I just want to show you a type of pattern that we were looking at, and basically what happened was that the pattern broke its trend line going lower, similar to the S&P 500 that's happening now. Exactly like that. Look, we broke lower, we touched our 50-day moving average and then bounced higher. And basically what happened with crude oil is that we're just now consolidating, and this is due to also the lack of movement from the US dollar. We did receive a drop last week, but then we bounced higher, bounced back. So if we just flip back for a second to the S&P 500, this is the XBX daily chart. We can see also roughly the same type of patterns happening. We can see that the S&P 500 broke its trend line going higher. That's no doubt about it. We were in this massive trend going higher right around here. We've broken it lower, and now we're on the 50-day moving average. Is this going to hold? I really don't know. We're going to have to see how they react to the NFP results that came out on Friday. Normally we receive one session after a kind of aftershock session, so we're going to have to see how this plays out. Remember, we've got support on the 15-day moving average. We've broken lower. It doesn't mean that the trend is now turning into a bearish trend. We are still a cautious bull at the moment, so we're looking to take this market still higher, but we're going to have to receive further confirmation of the trend going higher. At the moment, what it does look like is that we're going to now start to consolidate a little bit around this area. We've got a lot of congestion around this area as well. Keep your eyes peeled on that. Now, in addition, what I want to do, we're going to use a little bit of intermarket analysis here. I flipped over to the dollar index chart. We've received this massive cup kind of pattern here, a bounce higher, but if you look carefully, we are now at the top of our trend line resistance. So things don't look so good for the dollar at the moment. We could receive some further resistance around this area. We've been trading a lot around the 76 area. So basically the same type of pattern or the same type of correlation we're looking for at the moment. If the dollar is going to continue lower, if risk appetite is going to return to the market, so then yeah, we could receive a drop lower around current levels and a bounce around the 50-day moving average on equities like we just showed you before. On individual pairs, we're now on the euro against the US dollar. Now this is showing the same type of pattern as the S&P 500. I don't know if you've noticed it. We've got this trend line going higher, and basically we haven't broken this trend line yet. We are now on trend line support. Look at this. This is amazing. We've also got this minor trend line coming lower, so obviously a break above this level, above the 1.46, could lead us back higher. We haven't still come close to our 50-day moving average as in the past. Look at this. 1, 2, 3, 4, 5 times in the past we've come close to the 50-day moving average and we've bounced higher. So we've still got a little bit of room around this area, and what I'm thinking is if we do drop lower, we don't break this minor trend line going higher, we do drop lower. So I think basically the 50-day moving average is going to just catch up slowly, and if you look carefully also, we've got a lot of support around this area, roughly around here. So this is like a whole area of support around the 1.44, 1.45. So for those of you who are looking to take this short, I would wait for this chart to clear the whole of this area. Otherwise, we're still looking at bullish positions, and every pullback is just a correction to take this pair higher. Again, also watch out this week, we've got an interest rate decision coming up, so things could turn around slightly. I've now just flipped over to the pound against the dollar. This is also a daily chart. Now, we write often on the charts this few words, we normally call them margin of security. And what basically I'm talking about, let me just explain that in this video. Basically what we're talking about an area that normally looks like it's going to break out, but then ends up or turns out to be a fake out. And then what we do is we use that area as our margin of security. So let's say, for instance, we received here a breakout to the downside, obviously. And what happened was that we received an intraday reversal. We can see this hammer-like candlestick and then reversed higher. So then what we're going to do in the future, like now, is we're going to use this area. We're not going to enter on this area, we're going to enter below this area. So basically we're looking for a break lower below the 1.5801 area. We've got support around this area, and as we can see, we did break our support level of 1.6033. We headed into the area which is also known as margin of security. We didn't break lower. Now basically what's happening is we are consolidating in this area. We've got a minor trend line coming down like that. What I'm thinking is like this. We are now in an area we basically just have to keep a close eye out and see what's going to happen. If we're going to break this area to the upside, so we're going to head back into range, obviously we're going to need a break of trend line resistance as well. So we're talking about the whole of the 1.6033 area. If we're going to head lower, if the dollar is going to persist, it's going to start to really head higher, it's going to break its trend line. So then 1.5801 is going to be your key level. If we're going to break lower, so then we've got really a lot of room to drop lower. Last chart is the US dollar against the Japanese yen. Now we're going to do this quickly because we want to try and get it in the time frame that we have. Basically, we've now come down to February's lows. Look at this. This is amazing. We received a nice bullish pattern on Friday. Look at this. Look at this hammer. Amazing. But we're going to need a follow through. And when I'm talking about a follow through, I'm talking about a break of this trend line. At the moment, we can see that our trend is lower. We've got support around this area, roughly around 87. Does look like it could come down to touch 88, 87.99, 88.50, because we are still in this trend going lower. Again, you've got the trend line, use the trend line for a break. Obviously, if we're going to receive a break to the upside, could receive a nice rally higher, and I'm talking about a rally to roughly around 91 level, 91.20. Again, this isn't a trade that I would do. I'm not really also that fond of the US dollar against the Japanese yen. I don't really like it. Again, you have to trade what you feel comfortable with trading with. Hope you enjoyed the video. My name is Adam from Dodjit.com.